We think that that's going to be the final signal that tells us that, yes, we are in the acceleration phase. Because you go back and look in that late 2001 to 2011 bull market in gold and silver, it was in about 2010 that silver beat the pants off of gold. It just suddenly erupted and went to 50 bucks, from like 20. So while it might have bored you during much of the bull trend up through 1979 or up through, let's say, 2008, where silver was sort of keeping pace with gold, but really wasn't beating it. It was in the last year that silver went electric, and we're at the threshold of that right now. So anyway, it's going to be an exciting year, and probably a lot less than a year to gain most of what I see coming.
Gold has declined after being in overbought territory for some time, hovering around the $2,320 mark. This decrease in value suggests that the market is searching for new catalysts, whether bullish or bearish. Although there are early signs of vulnerability in US data that could impact yields and the dollar remains strong for now, with rate cut expectations being pushed back. The $2,320 level might be a potential support for gold, similar to what happened in March when gold consolidated around the previous all-time high before moving higher. On the other hand, silver prices declined as investors pulled back from safe haven assets following a reduction in geopolitical tension in the Middle East and reacting to fresh US economic data. This shift occurred as markets adjusted to the less immediate threat of conflict and scrutinized domestic economic indicators. Renowned analyst Michael Oliver highlights how silver notably outpaced gold in 2020 but has gradually declined in relative value. This trend, reflected in a declining trend line, is currently being challenged as silver attempts to break through. Similarly, the GDX minor ETF displays a decline in performance since the 2020 surge, hinting at a potential breakout that could initiate an acceleration phase in both metals. Michael observes that silver has already surpassed key momentum breakout levels, indicating a notable resurgence in upward momentum after a period of stagnation. This resurgence signals a potential shift in sentiment towards silver as it attempts to reclaim its position relative to gold. The remaining metric to align is the relationship between silver and gold prices, which is edging closer to indicating silver's potential to outperform gold again. Once this alignment occurs, it could serve as the conclusive confirmation of a bullish trend in silver, setting the stage for a potential renaissance in the precious metals market. We will present clips from Michael Oliver's interview with Liberty in Finance. But before we delve into it, please consider hitting the subscribe button and turning on the notification bell for future updates. Thank you, and enjoy the video.
We measure silver versus gold a different way than other people do. What we do is we divide the price of silver into gold. And if you do that, silver right now is just below 1.2% of the price of gold. If you ever close a month, frankly, if you close a week, in our opinion, about 1.21%. So not far above where we've been laboring the last several weeks. You're going to break that spread out. Now, what I mean by breakout is this. If you go back to 2020 high, when silver vastly outperformed gold in that surge, there's been a relative performance staircasing downside action on that spread, where silver's been losing value relative to gold. But you can plot it. It's a beautiful trend line. It's like a 5-point rally trend line. You hit the line, you back off. And so we're now pushing to try to get through that line. You do the same thing with GDX, the miners ETF, versus gold. You have the same sort of declining pattern since the surge in 2020 when miners beat gold. It's already breaking out with this month's action. So we think that that's going to be the final signal that tells us that, yes, we are in the acceleration phase. Because you go back and look in that late 2001 to 2011 bull market in gold and silver, it was in about 2010 that silver beat the pants off of gold. It just suddenly erupted and went to 50 bucks, from like 20. So it was not only acceleration in both metals to the upside, but at that point in time, in the final year especially, and this is true in 1979 to 80 as well, which was the tail end of that bull market, silver vastly beat gold. So while it might have bored you during much of the bull trend up through 1979 or up through, let's say, 2008, where silver was sort of keeping pace with gold, but really wasn't beating it, it was in the last year that silver went electric. And we're at the threshold of that right now. So anyway, it's going to be an exciting year and probably a lot less than a year to gain most of what I see coming. Well, it's achieved its momentum breakouts measuring its price versus certain long-term averages, like a 36-month average, which is like a 3-year average. It's not the crossing of that average that was so important, but when you plot an oscillator, where you plot the monthly action of silver in its relationship to, let's say, a 3-year average or a 36-month average, you get a different pattern on the chart than you do when you look at the price chart of silver. That broke out just above $25. And we're where? 27.30 or so right now. So we're well above the momentum breakout of silver, the level that says you're re-engaging silver. You're re-engaging to the upside. The 3 years of boredom is over. Okay. The only lagged metric we have now is what we were just talking about, the spread relationship between silver and gold. Just needs a decimal or so more, and that spread will join and say, yep, silver's going to beat gold. And that's basically our final signal.
During the 2008 gold sell-off, Michael points out a significant event reminiscent of historical crashes, like those in 1929 and 1987. As the financial crisis unfolded between March and October 2008, the gold market experienced a disorderly downturn, with prices plummeting to $692.50 per ounce following the Lehman Brothers collapse on September 15, 2008, marking a notable one-third decline from peak to trough. In late August and early September 2008, a crash-like event in the S&P triggered a drop in gold prices, coinciding with gold reaching recent all-time highs. However, amidst this turbulence, gold underwent a cleansing drop, wiping out previous lows and indicating a potential change in direction. Similarly, between 2020 and 2022, gold peaked near $2,070 before experiencing a pullback in September and October 2022. Despite briefly dipping below prior lows, gold swiftly rebounded to its previous highs, mirroring its resilience during the 2008 crisis. Michael compares these occurrences, suggesting that such cleansing drops signify the resolution of crises. Contrary to fears of an impending crash, Michael believes that any stock market decline would likely involve a gradual descent over several months rather than a sudden crash. Nonetheless, he maintains a bullish outlook on gold, silver, and mining stocks, foreseeing significant upside potential in the coming months. Let's get back to the interview.
And finally, in that October 2008 sell-off in gold, which was sympathetic with the stock market crash. By crash, what I mean is something that takes 30% off of a market in a matter of 2 weeks. Okay, that's what happened in 29, happened in 87, and in October of 2008, the S&P was already a year off of its high, had been declining for a full year, while gold had been going up, by the way, during that time. And during that, basically late August, early September, and especially October of 2008, there was this crash type event in the S&P. And sure enough, gold had a sympathetic drop, though it had been opposite the S&P for the prior year. So, but anyway, it did have a sympathetic drop. And it was one, when you look at the price chart of gold back then, there had been a range. It hit 1,000, backed off, hit 1,000. These are all-time new highs now. And it was July of 2008, before that drop, you hit 1,000 for a second time. And then that pullback finally sold off enough to where on a price chart, you finally took out a prior prominent low. First time in years that gold had had a sell-off that actually took out a prior low. So in effect, it had a cleansing drop. As soon as it finished that drop, boom, back to the highs. Okay. Meanwhile, S&P continued down until 2009. Very similar thing happened between 2020 2022. You come up to 2070 price level, backed off, came back up to 2070 again in March of 2022. So you, again, back up to the high for the second time. And it was the pullback from that March 2022 high that finally got out of control in when? September, October of 2022. And you took out a bunch of prior lows, just like what happened, like you said, in 2008. As soon as you did that, boom, you're back to the highs. So it was a fake out. That was a cleansing drop that was similar to the 2008 debacle. It was over with so fast, if you were on a long vacation, you missed it. Okay. Everybody seems to think we have to have another one. Why? You just had one. Okay. I don't think the stock market is about to crash, by the way. I think the stock market, if it's going to crash, which I think is a possibility in this bear market, doesn't always occur in bear markets, stock market doesn't always have a crash. Dot-com bubble never had a crash. Okay. It's going to take some months of downside arm wrestling in the stock market before you finally get it to levels that could generate a sharp, rapid sell off. Between now and then, I'm suspecting you got several months of arm wrestling decline. Now, there's some levels below the market, but they're down there. You're not threatening them right now. So I don't think there's any near-term jeopardy next couple months of anything like a crash in the stock market. Now, you get a little closer to the election, yeah, maybe. So gold, I don't think is threatened by that phenomenon again. And between now and the next couple of months, I strongly suspect gold's going a lot higher, and silver and miners especially a lot higher. And as you noted, if you go back to the February low of this year, look at the gain that silver's had from that low to the current price, even though there's been a recent pullback. Look at the percent gain in the miners from the February low to where they are now, and look at the percent gain in gold, and you'll find gold is much less gain on a percent basis than those two. I'm not worried about a sharp sell-off in gold. Yes, you're going to have week-to-week drops here and there, but I think we're in the acceleration phase, meaning that part of the bull market where most of the bull market gains of the entire trend at 8, 9 years, in this case, we're 8 years old as well, will be compressed in the final year of the move. Most of the drama, most of the percentage. And I think we're at that, we've crossed that line now. I think we're entering the acceleration phase.
Given the potential breakout in silver and its attempt to outperform gold, coupled with recent economic events such as the Federal Reserve's consideration of interest rate adjustments to curb inflation, we might anticipate a resurgence in investor interest in precious metals. Amid geopolitical tensions and market uncertainties, heightened demand for silver as a safe haven asset could drive its prices upward, potentially sparking a broader revival in the precious metals market. Share your thoughts on Michael's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.